Hey, what's going on, my fellow stock market gamblers? I hope you're having a great day. My name is Matt, and in this video, I will be doing both a fundamental and technical breakdown of the pharmaceutical giant Pfizer. Throughout the video, I will also be highlighting some key differences between Pfizer and Moderna so you have an idea of what stock is better suited for your trading style and goals. If you're interested in a full analytical breakdown of Moderna and its stock, there's a link to a video in the description below. If you're interested in this type of content, join the party by subscribing to the channel and don't forget to turn on your notifications so you don't miss any of the new videos. Your support is truly appreciated. Alrighty then, enough with the chit chat. Pfizer is a massive $200 billion plus pharmaceutical company who's responsible for Lipitor, Viagra, and various forms of oncology medicine. In fact, they own close to 100 drugs that are all in different stages of development. This is all good information to know, but it's not the reason why Pfizer has been in the news lately, and it's most likely not the reason why you clicked on this video. Pfizer has partnered with BioNTech to create a vaccine for the coronavirus. At the time I'm making this, in the US alone, there have been over 4.2 million cases and 5 straight days of more than 1,000 deaths. Some experts are finding these numbers to be so worrisome that they're urging the government to reimpose certain forms of lockdown. From a global perspective, there have been over 16 million cases. When you look at the cases per 1 million people of the United States versus the world, you quickly realize the people in the US are contracting the coronavirus at an alarming rate. This means the vaccine creation effort by companies such as Pfizer can best be described as vital. Fortunately, over 100 different companies are working on a vaccine, and some have been fast-tracked. Pfizer is one of a handful of companies that is a part of Operation Warp Speed. For those of you who don't know, OWS is an effort by the US government to deliver 300 million doses of a vaccine for the coronavirus by January 2021. They are attempting to streamline the process of development, manufacturing, and distribution of a vaccine by getting various federal agencies involved. Initial trials have proven to be positive. Even though Moderna is currently the farthest along in the vaccine creation process, Pfizer and their partner BioNTech recently inked a deal with the US government for 600 million doses of the coronavirus vaccine. The initial order is for 100 million doses, which is just under $2 billion. Pfizer believes that they can complete this order by the end of the year and potentially make more than 1 billion doses by the end of 2021. If things go according to plan, this would obviously be very bullish for the company and its stock. But as I said before, Pfizer is currently lagging behind Moderna, and as Ricky Bobby would say, if you're not first, you're last. To be fair though, Pfizer is working on 4 separate coronavirus vaccines at one time. They are speeding things up by doing parts of the phase 2 and phase 3 trials at the same time. And relative to Moderna, they are much larger, which means they have many more resources. Now that you have a better idea of the landscape that Pfizer is operating in, let's dive into the fundamentals. Let's start with the income statement. When you consider the net income, total revenues, and gross profit, you have a better appreciation for how big of a business Pfizer is. It's definitely good that all of these numbers have been positive from 2015 until now, but there hasn't been much growth. To help fix this, Pfizer recently sold one of its worst performing divisions to Mylan. I personally think this is a really smart move, and the benefits will be recognized within a quarter or two. Here is the balance sheet. The total current assets is just below $35,000 and the total current liabilities is just below $34,000. The ratio of current assets to current liabilities is above 1, which is good, but there isn't much of a buffer. The situation is a little bit better when you consider long-term assets and long-term liabilities. The total assets sits above $166,000, while the total liabilities is just below $101,000. This ratio of roughly 3 to 2 is good, but it's not as good as Moderna's, which is 10 to 1. Keep in mind though, Pfizer's revenues and net income is exponentially better than Moderna's. On top of that, Pfizer also offers a dividend. This means you would get paid every quarter to simply own the stock. Pfizer's dividend is considered to be very safe, and many analysts believe it's a dependable income source. Moderna does not currently offer a dividend. When considering Pfizer as an investment opportunity, the average Wall Street analyst is bullish. With 1 being very bearish and 5 being very bullish, the current rating is 3.77. Out of 18 analyst ratings, 8 are either bullish or very bullish, 10 are neutral, and there are no bearish ratings. At the time I'm making this, Pfizer is trading just above $37 and the average analyst price target is just above 41. To get a better idea of the support and resistance in this region, let's break down the chart with technical analysis. This is the daily chart for Pfizer, whose stock ticker is PFE. Since the start of this year, the company is down just over 4%. At its low in March, it was down over 28%. Since then, it has managed to gain a solid 34.6%. In July alone, the stock is up a respectable 11%. This recent run was mainly due to the positive results of their Phase 1 and Phase 2 trials and also signing a deal with the US government. As the company continues to work on the vaccine, any positive announcements will prompt bullish sentiment. If you already have a long position, I would personally be looking to take some of my profits off the table at various resistance points. The first resistance would be at 38.44, which rejected the stock twice in May and once in February. If the bulls push the market above that, the next resistance I would be watching would be the recent high of 39.42. If the bears can't defend this line, I would then be watching the resistance just below $41. Just so you know, the all-time high isn't far away at $46. On the flip side, if you're bearish or if you're looking to create a long position, you'll want to know where the supports are. The first one would be at 36.66. This was the high in June, and if the market is pushed below it, I would then be watching $35, which has previously served as resistance and support. If the bulls can't hold this line, I would then be watching $33, and this would be followed by $31.61. Whether you're bullish or bearish, you should be entering your trades as close to support and resistance as possible so you can optimize your risk to reward. Overall, I do think Pfizer is a good medium and long-term investment. The short term is difficult to predict because it's highly reliant on the company's announcements related to its coronavirus vaccine. A successful vaccine will most likely drive the stock to new highs. But even if that project doesn't turn out well, Pfizer has many other things going for it. However, I don't think it has the same growth potential as Moderna. Moderna comes with much greater risk though. Depending on your personal trading style, Pfizer is the low risk, low reward play, and Moderna is the high risk, high reward play. Another big player who's trying to create a vaccine for the coronavirus is AstraZeneca. If you're interested in me making an analysis video on that company, let me know in a comment below. If you want a more in-depth analysis of what's going on with Moderna, there's a link in the description below. If you enjoyed the video, let me know by hitting the like button. If you enjoyed this type of content, subscribe to the channel and don't forget to turn on your notifications. Thanks for watching, and until next time, best of luck in the markets.